Continuing with our trading video yesterday, learning a dynamic trading strategy for Forex trading, we already had set up both our 50 EMA defined by the purplish colored line, also known as the slow EMA, and we already had defined the 20 EMA displayed here by the orange colored line, also known as the fast EMA. And I explained in the prior video why we're using moving averages as part of our dynamic trading strategy. Now, with this set in place, we can already trade based on signals that we see here. Remember, the premise of this dynamic trading strategy is that if the fast EMA or the 20 EMA right here goes below the slow EMA or the 50 EMA and price is below the 20 EMA, we have a possible sell opportunity, and as you can see, we sure did. The reverse is equally true. When the 20 EMA or the fast EMA crosses above the 50 EMA or slow EMA and price is now above the 20 EMA, we have a buy opportunity. And again, as you can see, we had a good one. So that is the premise of the strategy thus far. And while this clearly works, it has its pitfalls. And the pitfalls are that, like in this case right here, you're going to have a little bit of whipsaw and the market is kind of going flat right around here. So what do you do here? Is this a trading opportunity, yes or no? Well, first of all, while the 20 EMA is right here above the 50 EMA, it didn't cross from below to the upside. It was already above. It just kind of, if you see that, let me enlarge this a little bit so that you can see this a little clearer what I'm talking about. There you go. While the while price dipped below the 50 EMA and reversed, the 20 EMA itself stayed above the 50 EMA, and then price continued up there, and it kind of started going a little sideways, very, very slowly heading upwards. So this is not really a trading signal right here. It is quote unquote a continuation of what we had right here. So in order to avoid these kind of what's called whipsaws or fake signals, we're going to add a third option to our trading strategy, another tool. And the tool we're going to use again is nothing special. It's not a custom tool. It comes default with every trading platform. In our case, I'm using MT4, but it comes with every platform. So we click on the indicator installation icon, and we're choosing average directional movement index. If you do not see it in the main box, simply highlight trend and you will see it over here. It's the exact same indicator. The average, in order to install it, simply click on it, and we need to change a few things. We leave the period at 14. If it isn't at 14 in your case, change it to 14. We apply to close, set your preferred color and preferred width of line that you want, then click on levels. And normally this box should be blank, but in case it isn't, like in my case, we are going to get rid of this first. So we have a blank box, and then we're going to add new levels to this. To do this, simply highlight the first level, click on delete, repeat the process, repeat the process. Now you have a blank box. To add a new level, click on add once, and in the white space here, add the following. We add 15. Now click on add twice. We add 25. click on add twice again, and we add 40 and click on add once. Now set your preferred color for the lines, those levels that are going to be generated on your chart, as well the type of line you want to have to indicate those levels. If you're happy the way it is, click on OK, and now you have a new indicator added to your chart, which is the average directional movement index, or ADX for short. I'm going to explain to you now how this works in conjunction with our strategy so that we get a stronger signal. The first thing that we need to keep an eye on is this area here, and the second one is these two numbers right here. As you see, they're constantly fluctuating. Let's start with the area right around here. So how does this work? Well, at this point in time, let's just hopefully we're getting a crossover here, and it would be nice if it did, because then I can really show it. But just in case it isn't, let's presume we already have the crossover, that this extended into a crossover right here. Then price is now below the 20 EMA, excuse me, there we go, is now below the 50 EMA, and price is below the 20 EMA. With a little bit of luck, let's wait for just a split second and see if we get a crossover. It would be really nice. I mean, timing would be perfect on this. And I can actually show you, okay, that's a long bar that will probably retrace. Okay, we got a crossover, as you could tell, a slight one, but we have it right there. So the 20 EMA is below the 50 EMA, price is below the 20 EMA, and we could enter this as a sell position. But we want to make sure that the trend is equally strong. In other words, that we have a strong downtrend. And in order to confirm that, we are now going to our ADX that we just installed. The levels work as follows. If the line is below 15, it means that there is basically no existing trend. Don't bother entering this, because this will be very short-lived. If the line is between the area or zone of 15 and 25, it means a trend is forming, but it's still a weak trend. It's not too solid just yet. If the line is forming, as you saw right here, between the 25 and the 40 zone, it means we have a strong trend, and there is no reason why we should not take this trade. And sure enough, had I entered right here, as I said it was going to go, I would have had already a nice little piece of profit right here. Now, if, continuing explanation of the ADX, the line moves above the 40 in this area right here, we are in what is called, now it just dipped, we are in what is called an extreme trend. And that is actually a little bit of an alert, because extreme means that ADX may strength of the trend may continue to go up, or it may actually start slowly degrading and go down. Now, if that is the case, that it starts degrading and go down, but the line that you see here continues to hover between 25 and 40, you have a good solid trend, and there is no reason to panic. Again, this is only, the ADX only indicates the strength of the trend, not the direction of the trend. Okay, for that we're going to do still something else. Now, with this set, I could have already taken that trade, but I want to have yet one more confirmation. And that confirmation has to do with what you see right here. And it's actually very simple. If we are currently above 40, so we're definitely in the extreme zone, strong trend. In fact, it shows us exactly We're at 49 and still climbing. Now, if the plus DI is below or smaller than the minus DI, which is the case right here, and it's remarkably less, that means we have a very strong downtrend. And the reverse would be true if the plus DI is above or greater than the minus DI. We would have the reverse and we would have a very strong uptrend. Again, you need to take these two numbers in conjunction with each other. What I mean is, if the, let's say right here, you're sitting in the 0 to 15 zone, but yet it shows you these numbers right here, which I promise you it won't, but let's just arbitrarily say it does. You don't have a strong trend because right here you're sitting basically at a non-existing trend. So you got to compare the two. In this case, we are definitely in the extreme zone, and we have a serious gap between the minus DI and plus DI. So again, if the minus DI is greater than the plus DI, we have a strong downtrend. And if the plus DI is greater than the minus DI, we have a strong uptrend based on what zone our ADX is hovering in. Again, always at least aim for between 25 and 40 zone, and you'll be doing quite well. Now, at this point in time, there is one more thing I would like to add to this, and then I will end this video, and tomorrow we'll continue with the rest, because if not, I'm going to overwhelm you. Start to slowly pay attention now to this position. Let's just say that we did enter it. Would have been a nice position because the ADX right here starts to slowly curve. So the trend may start to get a little weaker. Keep an eye on it, and you see it, the plus DI is gradually increasing. The minus DI was at 50, it is gradually decreasing. So we are possibly seeing a slight decline. Just keep an eye on it. So far, it's still going good. Here is our first bull bar, an indication that this indeed may be the case. So at this point in time, if you were in a position, you could exit, or you could let it run a little longer and see if perhaps we may have a few more lower dips. Well, here we go, we do. Or if we start to begin to bounce, I call bouncing going like this. And if that is the case, absolutely exit the trade. You're done. Now, as I said, we're going to add one more item to this. So one more tool to confirm that we are indeed in a downtrend. Although the ADX already told us we definitely have a strong downtrend, we want to make sure we are absolutely in a downtrend. And for that, yet again, we use a standard tool, and it's yet again a moving average, but this time it's configured as the 100. And the 100 is a well-known moving average that is even used by professional traders to determine the direction of the trend. So let's install this moving average. We set the period to 100, shift stays at 0, exponential again on the close. Choose your favorite color with the favorite size of line, click on OK, and you're done. Now, as you can see, we are definitely in a downtrend, and you determine that by the fast moving average right here is below the 100, the slow moving average is below 100, and price is below the 100. This is most definitely a downtrend that we just entered, at least for the time being, and the ADX confirmed right here that it's a very solid strong trend, again right here as well. So that's why this was most definitely worth taking, because look at the result that we got, and it doesn't show any signs of ending just yet. This would have been a really, really nice, profitable sell order. So this is it for today. I don't want to overcomplicate things, but you can always rewatch the videos, and I urge you to do that so that it's clear in your mind what the rules of the strategies are, how you interpret the tools that we're using. And I promise you, as we go on in this small mini course of learning how to trade dynamically, this is actually going to become much more simplified. So not overly simplified, but definitely a little easier to follow and a little easier to understand. But by that point, you will have a solid grasp on what we're doing, why we're doing it, and why it's working most of all. Okay, this is Load with Black Bear Dog Trading signing out. As always, wish you the very best. Please stay safe and God bless.